Title: The Pillar of Prosperity, the crucial role of political stability in attracting foreign investment. Introduction. In global economic interactions, the stage upon which nations vie for foreign investment is defined not only by economic indicators but also by the stability of their political landscapes. Political stability stands as a linchpin in attracting foreign investment, casting a profound influence on investor confidence, risk perception, and the long-term viability of economic partnerships. To unravel the dynamics at play, one must delve into the intricate relationship between political stability and the allure it holds for international investors. The foundation of confidence. Political stability serves as the bedrock upon which investor confidence is built. Foreign investors, whether institutional or individual, seek environments that offer predictability, continuity, and a reduced likelihood of sudden policy shifts or upheavals. Nations characterized by stable political systems provide a sense of security to investors, assuring them that their investments are shielded from the capricious winds of political uncertainty. Consider the hypothetical scenario of country A, marked by a history of stable governance and peaceful transitions of power. Investors eyeing opportunities in country A are likely to view it as a safer bet compared to country B, where political turbulence and frequent changes in leadership create an environment fraught with unpredictability. The perception of political stability becomes a catalyst for investor trust, fostering a conducive atmosphere for foreign capital to flow seamlessly into the country. Risk mitigation and long-term planning. Political stability acts as a powerful risk mitigator, allowing foreign investors to engage in long-term planning with a degree of assurance. In politically stable environments, governments are better positioned to implement and adhere to consistent economic policies. This reliability is paramount for investors, who often deploy significant resources with the expectation of a stable regulatory framework that persists over time. In contrast, political instability introduces an element of risk that can impede foreign investment. Sudden policy reversals, regulatory flip-flops, or political unrest can disrupt business operations and erode the value of investments. Investors, wary of such uncertainties, may opt for more stable jurisdictions where the rule of law prevails, safeguarding their interests and enabling them to make informed decisions about the deployment of capital. The virtuous cycle of economic development. Political stability not only attracts foreign investment but also contributes to a virtuous cycle of economic development. As foreign capital flows into a politically stable nation, it stimulates economic growth, creates jobs, and fosters prosperity. The resulting economic stability, in turn, reinforces the political stability of the nation, creating a symbiotic relationship that benefits both domestic and foreign stakeholders. For example, country C, characterized by a stable political environment, attracts foreign direct investment, FDI, from multinational corporations. These investments spur the growth of local industries, elevate employment levels, and contribute to the overall economic well-being of the nation. In this virtuous cycle, the stability of the political system becomes a catalyst for sustained economic development, positioning the country as an attractive destination for foreign investors seeking long-term returns. Rule of law and investor protection. Political stability is inherently tied to the rule of law, a crucial factor that underpins investor protection and legal recourse. Nations with stable political systems typically have well-established legal frameworks that safeguard property rights, enforce contracts, and provide a transparent dispute resolution process. These elements are vital for foreign investors, as they seek assurances that their investments are shielded from arbitrary expropriation or legal uncertainties. Consider the case of Country D, where a robust legal system ensures that contracts are honored, property rights are respected, and disputes are resolved impartially. Investors in Country D can operate with confidence, knowing that their investments are backed by a legal framework that upholds the rule of law. This legal security amplifies the attractiveness of the nation, fostering an environment conducive to foreign investment. Diplomacy and bilateral relations. Political stability extends beyond domestic considerations to encompass a nation's diplomatic relations on the global stage. Countries with stable political systems often forge stronger diplomatic ties, facilitating international cooperation and partnerships. These positive diplomatic relations can be instrumental in attracting foreign investment, as nations seek to engage with reliable and cooperative partners. For instance, Country E, with a history of political stability, may find it easier to negotiate trade agreements, establish bilateral investment treaties, and foster collaborative initiatives with other nations. The diplomatic goodwill generated by political stability can act as a magnet for foreign investors, who are more inclined to explore opportunities in a country with a reputation for reliability and cooperative international relations. Conclusion. In the intricate dance between nations and investors, political stability emerges as a defining partner that shapes the rhythm of economic progress. Its significance in attracting foreign investment cannot be overstated, as it forms the basis of investor confidence, risk mitigation, and sustained economic development. As nations strive to position themselves on the global investment stage, the role of political stability becomes a pivotal factor that not only beckons foreign capital, but also lays the groundwork for a harmonious and prosperous partnership between nations and the investors who seek to contribute to their growth.